We welcome again Hick Federci from Ausbil Investments for another weekly market update. Hick has been keeping us up to date and helping educate our clients about the current coronavirus pandemic, which obviously has had an impact on markets over the past couple of months. We're aiming to ask Hick a couple of important questions for our clients each week about markets in the changing landscape going forward from the impacts of the coronavirus pandemic. So Hick, given that it's almost certain that Australia and other countries will fall into recession because of the coronavirus pandemic, what factors do you think will help an eventual share market rebound compared to other crises over history?
Thanks, Chris, for the question, and g'day everybody again. Just like normal, I just have to give a quick disclaimer to say that what I'm going to talk about is information rather than advice, because I might mention a couple of stocks and sectors today. But in answer to your first question there, Chris, we've actually seen a bounce in the market, a reasonably strong bounce from the March 23rd lows. But for a more sustained long-term recovery, what we really need is a sign that the lockdowns are starting to have an effect in terms of flattening the infection rates, so-called flattening of the curve. But what, in terms of a more long-term recovery, what we need is a sense of the total duration of the shutdown. So we need a little bit more certainty there, because we're still in that period where whilst infection rates seem to be plateauing, isn't really there yet. And we also need confidence that we're not going to get a reinfection or a sort of second wave. But certainly there's positive signs that the market is already getting some confidence that measures are starting to have some effect.
That's great. Thanks for that answer. The coronavirus pandemic will be a threat to cash flow and the existence of many businesses now and likely into the future, which is obviously a concern for investors, reflected in the aggressive market declines we've seen. When it comes to investing, is it now becoming more important to reassess exposure to certain industry sectors and determine which companies are best placed in that future world landscape? And how are managers at Ausbil positioning their strategies in light of these changing landscapes?
Yeah, Chris, those are good questions. And certainly what I'd say is we're into certainly the second stage of this market crisis, economic crisis, insofar as we're now starting to get real differentiation in terms of the performance of different stocks and sectors. And we at Ausbil are very much looking at sectors and stocks on an individual basis, because during the crisis itself, there are some sectors and stocks which will perform better. And we've seen that in terms of things like consumer staples, for example, in Australia, like the performance of Woolworths and Coles and Metcash, where they've actually increased sales during this lockdown crisis, and also the telecommunications sector, for example, where people working from home, there's a lot more demand for data, telecommunication services. So names like Telstra and TPG are again in favour. And then you've got the true defensive stocks. Most stocks are affected by the coronavirus. Most sectors are affected by the coronavirus. But there are some true defensive sectors where their business model isn't affected at all. You could look at things like pipelines, for example. And a stock that's been very stable in Australia over the whole of this crisis has been APA. Then we look at other sectors which are more interesting from the point of view of a recovery. So sectors where they've certainly been affected in a great way by the shutdown, but we expect to bounce back quite quickly. An example would be in transportation, things like toll roads, where as soon as the lockdown eases, the volumes and traffic through the toll roads should return to normal. And even you'd think more at risk, but will recover, things like the airports. Whilst they've almost gone to zero activity, once the lockdown ends, domestic travel will resume. So things like Sydney airports or even Auckland airports are names that we've looked at in that sector. There are, of course, some sectors which are going to be much more vulnerable and may not recover. The media sector is one that's certainly a focus at the moment. On the global scale as well, you can see in the US markets, there are some stocks that are doing very well through this crisis, Amazon and Netflix to name but two. So there are winners at the moment, but there will be real good recovery stories on the other side of this crisis. But of course, there are going to be certain companies which may well not survive. So you've got to be quite careful.
So thanks very much again, Hick, for your valuable time and information today, and helping our business and clients navigate through these times. And we look forward to catching up with you again very soon in the future.
Yeah,
Thanks.
No problem at all, Chris. And I hope all your clients stay positive in this quite tough time, and certainly stick to their long-term objectives, because patient investors are always rewarded in the end.
Thanks very much, Hick.